Welcome back. Well, as promised, we have Prakash Diwan, market expert, who joins us on the show. Hi, Prakash. Good morning. Good to see you, Ben. Well, let's go full throttle first on the big deal. VIP, finally, Mr. Piramal has agreed to go ahead and do a deal, and they have sold stake to PE. The problem is that the stock has rallied close to 70%. And if you look at it, the deal as well as price at a discount. What's your view on the stock from here on VIP? We have discussed this numerous times. I was lucky to have the management on my show as well a year or so ago, where they were saying that things will revive from here on. I also tried to push them on the stake sale. But that time, they didn't comment. Ms. Neetu was the one who we were interviewing. What's your view on the stock from here on? If it opens lower, will you be looking to get in? And also, if you could comment on Safari, because that's borne the brunt of this pricing pressure and pricing discounts. Now, this deal could be a positive for the luggage industry on the whole. Your take.
Good morning, Nigel. So, you're right. The VIP stock has had a very, very elongated anticipation built around it. And finally, the deals happened. But I'm not surprised at the discount at which it's happened. Promoter exits are usually, they come with a little bit of illiquidity discounts. And the fact that it has rallied was in anticipation that, it could be a deal that will be like it's not a fire sale, but it's probably something where somebody would want to pay premium. Given the situation of the business and the promoter's own context, I think the deal's pretty well priced. If the market gives you a negative reaction to it, it could be an opportunity for some sort of nibbling to start. But the real change will happen once the private equity owners settle in and the plans to professionalize the business completely get underway. And that's exactly what's required out here. So that could take a couple of quarters. But as soon as those things are much more visible, it becomes a stronger bet, because consumption, particularly around travel, is something which all of us are very positive on. It should impact. The Safari, this thing is, impact is the second order impact is going to be that Safari will probably be more positive after this, because it gives them time to restore market share, get into some of the segments while VIP kind of resets itself to this new reality. So yeah, from that perspective, it could be a faster tactical play, but I think VIP will give you a far better solid foundation over the next 6 months.
Okay, so that's VIP, and how Prakash is reading what is a transition now that the company is in. Prakash, hi, good to have you on. Lots of pharma news over the last couple of days, right? Glenmark, of course, is a blockbuster opportunity that they've grabbed. But then they have some outstanding FDA issues as well with a couple of their plans. Those were the reports over the weekend. In addition, we now have news on Divi's, one of their major cancer drugs that they're in partnership with Novartis. There's a legal challenge. Any thoughts on these two stocks, Glenmark and Divi's?
Good morning, Shobhi. So let me take Glenmark first, because I think it's positive. The fact that they have a 1.2 billion, hold coming through over the next few years. This is the first time that a company in India, a pharma company in India, is actually getting to monetize R&D effort of this scale. There are companies which have been dedicatedly doing that, but nobody's kind of been able to monetize it and reach fruition. So I think, of course, the stock has reacted very positively. You saw what it did on Friday. But if you get a chance to get in, remember the deal is still on. The money that they're going to make from this research initiative is very much there. There's nothing taking that away. These kind of US FDA inspection related speed breakers are just speed breakers. They are not road closures for any sort. So I think they'll get over that. So this is an opportunity where people who have missed out on Glenmark's brilliant run could probably do that. We spoke about this at about 1,000 levels. So you can see how well, how smoothly and gradually it's kind of, made its way to the 2,000 mark. So my sense is these are opportunities to latch on to good names. Divi's will, of course, get impacted. I don't know, but the rough estimates are anywhere upwards of 10% is where the contribution is. So that could probably evaporate over a period of time. But then they have so many other things coming out for them. So you lose out on some big contracts. You probably, make compensate that with some other contracts. But that could take some time. Again, opportunity to get into a business that's been so resilient and so innovative in terms of its approach. So, people find divis expensive, and these are opportunities where you probably, get that blink to get it.
No, absolutely. Prakash, hi, morning. IT services after TCS on Friday, more will come this week. But more downside in TCS and anything else you're doing?
Good morning, Prashant. So, essentially, we've been a bit wary of these large IT names because there's nothing in terms of a trigger that takes things to a different level. Especially if you look at, I have a big issue with these large companies because they have been just returning cash through buybacks and dividends and all. They've not made any inorganic acquisitions, any growth kind of impulse. Especially in Europe, there's brilliant businesses available, which could kind of, help them diversify, change their revenue streams. But, it's a regular ho-hum business which they keep trying to make the best out of. I mean, maybe they don't have much of a choice given the scale, but the situation in the US is not very conducive to any re-rating of sorts. And I would believe the TCVs will probably hover around this 10 billion kind of mark for the next quarter also. And once, that changes and you have some sort of realization which help improve margin, I don't think there's going to be any re-rating down here. So it's best to stay away is the short answer. HCL Tech also, we're not having much of expectation. 2 to 5% is the guidance, and that's really not something which can do much to the stock. So let's see. But you always have some outlier. I don't know who will that be, whether it's Infosys, whether it's Wipro, but at this point in time, large cap IT doesn't look like very promising.
Prakash, silver's given a big breakout. Global prices over the weekend went to around $39. That's the highest we've seen in more than 13 years.
Yeah.
And now that ratio, I've been talking about this ratio between gold as well as silver. And if you look at the last 2 months, actually silver has outperformed gold. Because the ratio went to around 100 odd, with gold moving to $3,400, while silver was $34 an ounce. Yeah. Now that it's moved up, so it's narrowing that gap. Given the kind of move that you've seen on silver, there's only one particular play, which is Hindustan Zinc. How would you trade this particular stock? Remember that overhang with regard to the OFS, part of that is out of the way. With regard to the promoter selling, that's out of the way. Now we'll keep an eye on the government of India's plans. But since it's the only play on silver, your view on Hindustan Zinc?
So, Nigel, while I completely am in sync with your view on the silver, the disparity between gold and silver prices coming down in favor of silver, it might make sense to play silver directly through some ETFs, if you will. But, Hindustan Zinc, there's lots of regulatory issues, not regulatory, but decision-making issues which could defer the whole thing. And, we're not sure whether silver would maintain that kind of an edge for that long. So that's the thing. The other problem with Hindustan Zinc is its core business. While silver is a byproduct, the core business expansion hasn't been very optimistic or very favorable. So till that happens, of course, I do understand on the overhang being out of the way, but the operational efficiency also needs to kind of, bring that salience in. And that's still some time away. So I would, as I said, play directly through some ETFs rather than, work on this, because there are lots of optionalities that that dilute the impact of silver prices firming up.
Got that. Markets the pre-open session is kicking off and they're blinking red and green, not very settled kind of rate. Maybe we'll look back at it about 2 minutes time. Prakash, the other area which saw a fair bit of pullback, right, was exchanges last week. BSE was down 10% last week. MCX was down over 10% as well last week, of course, with BSE. And the stock exchanges, there was that Jane issue. There are some reports at the margin which suggest that Jane has deposited money. Jane Street has deposited the money, in an escrow account. We don't know if they're going to be back in the market or not. We will put it out as we get confirmation. But any thoughts on BSE specifically? And I mean, if you have a view on MCX as well.
So, Prashant, while, we have seen one order where Jane Street has been held responsible for some of the, misdeeds of sorts. There could be a continuation of this investigation, which will reveal some other names, and that will ensure that things take some time to look up. The volumes are never going to come back to what we've seen at the peak levels, and which is good for retail investors in that sense. But my sense is this is not out of the way yet. Jane Street could be probably not a topic anymore. They paid up the fine. They may not resume trading. But whoever does that, whoever has to trade will be doing it with a lot of caution, with much more guardrails. And that means volumes will not pick up. So if in the absence of that, probably, the PSE or all these exchanges have corrected because they were overvalued to a large extent. And that's happened. Now it's up back to organic growth, new IPOs, all other volumes picking up, demat accounts adding up. But I don't think the options volumes is going to bring any spark to any of these exchanges.
Got that. A little later, we'll be speaking with Prakash briefly. Oswal Pumps, recent listing on the numbers. I don't know if you looked at it in any detail. They reported numbers. Any thoughts on this one?
So I did look at those numbers, not in detail, but just out of curiosity. But the numbers seem to be far more disappointing than what the IPO outlook promised. And this is typical of IPOs where you don't get things right on day one. It takes time for people to understand the business as earnings get shared. And that's why I've never been a big IPO fan. I would believe this will take some time to understand and then the market. There's too much optimism built into some of the government contracts and orders, which could take much longer. We've seen that in all sectors, all subsectors. You really can't kind of pencil in perfect timelines and start pricing the stock for those favorable outcomes. I would believe it will go through a little bit of a consolidation before the real price equilibrium gets discovered.
All right, Prakash, thanks a lot for joining in. And you could tune in to our chat with the management in a few minutes from now at around 9:40 or thereabouts. So do tune into that. But wishing you a good Monday, and we'll catch up as the course of the week does progress.